But Jahangir Aziz, Head of Emerging Markets, Economics Research and Commodities at JP Morgan, joins in. Hi Jahangir, good morning. It's Meena joining in. We live in interesting times. So we don't react to what's happening geopolitically. We don't react to what's happening on Bitcoin, at least in India. But the big cue for us is going to be in terms of what the RBI governor does this time around. It's a tough one. Right. GDP data was disappointing. Inflation is still a concern. There's hopes that government spending needs to pick up. And more importantly, the rate differential between the US and India is another factor we don't talk about often, but is still important. What are you expecting?
Look, it's a difficult call, right? So everything points to the fact, especially after the growth disappointment, everything points to the fact that, they should be cutting rates. We had been calling for a rate cut for quite some time. Even though we do not have a rate cut for this meeting, we have it in February, but that was on the back of both, the change in our forecast for the Fed, as well as, potential tariff-related increases taking place in the US. But I think that, when you look at what has happened over the last 2-3 months, where the RBI has had to intervene significantly, almost relentlessly, there has been a significant amount of liquidity that's been sucked out from the market. And consequently, and of course, there's end December tax payments coming through. So I think the first issue will be for the RBI to deal with this liquidity problem. And, the normal reaction to all of that would be, okay, fine, you do some liquidity measures, including a CRR cut. But then you get complicated by the fact that you had a growth disappointment, and as you rightly pointed out, inflation isn't doing very much. So if the RBI is struggling to stabilize the exchange rate, and you cut rates right now, even if it's for a good cause, which is that growth is slowing down, you could end up spiking inflation by depreciating the currency, which they wouldn't want to do. And therefore, you would require even more FX interventions, and therefore even more liquidity being sucked up. So it is not a very easy situation for the RBI. My sense is that they will likely do little bits and pieces of everything, as they normally do, which is they will intervene in the bond market, they will intervene in the FX market, they'll probably cut down CRR, they will also might actually do a rate cut, at 25 basis points of rate cut wouldn't be out of the ordinary at this point in time. And obviously they would provide a cautiously dovish stance. They can't be truly cautious because inflation is a problem. So my sense is that they will do what RBI normally does, which is little bits and pieces of everything.
Jahangir, good evening to you, Neeraj here. I saw the notes, right, that your base case is that there is a hold but a dovish stance. What is the probability that we can be surprised? I mean, if you look at the PSU Bank Index, it seems like they are baking in rate action. What's the probability?
Look, all sorts of rumors are flying around for all sorts of reasons. But my guess is that, as I said, it is clearly they will have to do something on the liquidity front. That's not an issue. So there will be liquidity easing measures, exactly what they want to do, whether or not they want to put a permanent increase in liquidity through a CRR cut. That depends upon how they see things panning out. As I said, FX intervention is going to remain, for quite some time, because the pressures are going to be on the rupee simply because of US dollar strength and concerns about, tariff increases by the US in January once the new administration comes into power. So I don't think they can escape saying that, well, we don't need a permanent increase in liquidity, which is why I think, a CRR cut is probably on the cards. But as I said, there is nothing that stops them from cutting interest rates at this point either, because we have been calling for interest rate cut for quite some time. In fact, we have more interest rate cuts in our forecast than the market has for 2025. Is a question of timing. We think that the timing is off a bit simply because there's significant amount of global uncertainties. But look, as I look around the world in the last, 3, 4 weeks, a significant, in fact, almost all central banks who have had a policy meeting in the last 2, 3 weeks, despite the fact that there's heightened global uncertainty, have all cut rates, barring except Brazil. So Brazil being the only one that hasn't, but everybody else has cut rates. So I really wouldn't be surprised if you get a 25 basis points of rate cuts at the same time.
Jahangir, this is such a valid point, right? Because there has been a rupee suck out on back of what's happening on the currency. Now, while, this is what maybe some parts of the market do believe, that the RBI was behind the curve on monetary policy activity, growth is slowing, and it's very unlikely at this stage that we're going back to 7+ growth without any counter-cyclical measures undertaken by the monetary policy of the RBI in that sense. So maybe you get the 25 basis point rate cut, but that again won't be enough. And also the other argument, what if the Fed holds steady? The risk reward is not going to be in favor for rupee assets. How does that dynamic then play out?
Look, again, this is not a very easy world to
it's a tough job to have.
Yeah. Especially if you have a US administration that's going to come in about a month and a half times, and there is significant amount of uncertainty as to what policy changes will take place. We know there will be significant policy changes on tariffs, immigration, fiscal policy, and but the details are unknown. So the world is tough to make a policy decision at this point in time. But as I said, that India is not the only country facing similar issues. Almost all the central banks over the last 2, 3 weeks have faced exactly the same issues. And if you look at all of the central banks, these central banks have basically said, okay, we will keep aside the uncertainty. We understand what is happening, but for our own domestic purposes, we need to cut rates, and we will cut rates. So I don't think that cutting rate at this point in time, despite everything that you and I talked about, of all the uncertainties, the fact that India doesn't really have that much of a cushion against the Fed. The Fed, we have a Fed rate cut in December, but the Fed might, if it's a close call, the Fed could stop. Fed could basically take a pause. All of that being said, I think at the end of the day, a central bank will do what is domestically imperative. And I think domestic imperative has been calling for a rate cut and an easing in the restrictive stance of RBI, even though they claim that it's a neutral stance. At least that's what they said in the last policy review. It is a very restrictive stance to do, and it was just a question of timing, whether it was going to be now or whether it was going to be in February. We have 100 basis points of rate cuts for 2025, so significantly more than the market. So you can understand where our bias lies.
Very lastly, Jahangir, a last question from my end. I take your point that it takes time to act, but the counterpoint is also that why is consumption weak? It's because of inflation, right? And can the RBI at this stage do a cut without injuring its credibility in some ways? Because when we had the last reading, it was well above our comfort zone of 6.2 in terms of October's reading.
Consumption isn't weak in India. Real income is weak. Households are doing exactly what the households are supposed to be doing. If you go back to, let's say, fiscal year 24, right? Not the last 2 quarters. That's the fiscal year 24. You look at India's nominal GDP was 9.5%. India's inflation was 5.5%. So real income of households grew by 4%, and consumption grew by 4%. Where is the puzzle? In fact, the puzzle is now that we've had 2 separate quarters of low growth, and you have consumption actually higher than the growth rate, than the GDP growth rate. That is what the puzzle should be. So I don't see why we go back to this argument that consumption is weak. Consumption isn't weak. Real incomes are weak. And the question that needs to be asked is that why is real income weak? Or why did real income run at 4% last fiscal when growth was above 8%? I think that's the question. I don't think that the households are doing anything wrong, by the way. They are doing exactly what their disposable income is telling them what to do.
No, but Jahangir, as a result, I mean, cause and effect, but as a result of that, the consumption numbers, I mean, have fallen, right? I mean, it's evident at least in the results of the listed companies.
It should fall.
Yeah, of course. But I mean, so that's why.
If your real income is growing by 4%, you can't be consuming more than 4%.
Exactly.
Yeah. I mean, right now I think that the consumption is actually growing because of the significant amount of, income transfers that every state government seems to have been promising to people. So I think part of the reason why you're seeing rural consumption growing up is largely because every state government is opening their purse strings completely.
Yeah. Jahangir, sorry, very quickly before we let you go,
sure.
Any difference if there is an extension to Governor Shaktikanta Das or no?
It doesn't matter, right? I mean, every time you have a change in the governor, you do have a change in the manner in which the RBI thinks about policies, thinks about banking supervision, etc. So I would be the last person to say that, no, the governor doesn't matter. The governor does matter. My guess is that, they are going to look for somebody, if they want to replace the governor, with somebody who's going to continue with this policy rather than be disruptive about the policy. And the governor's case, I think we are going to continue to see what he has been doing for the last 5 years. But let's,
Yeah, go on.
No, but let's not minimize the fact that or dismiss the thing that the governor of the Central Reserve Bank of India doesn't matter. He or she does matter.
Right. Very lastly, as we wrap this conversation, Jahangir, will the RBI announce a rate cut today? Yes or no?
Most likely.
A rate cut. CRR cut?
Yes.
Change of stance?
Obviously, you can't have
one without the other.
Without
Okay, so we are aggressive. We are expecting a rate cut. Thank you, Jahangir. Have a good evening. We'll speak to you soon.
Sure.
Well, Jahangir, in the markets, Neeraj, both believe a rate cut is coming in 2 hours from now.